Hello again, this is Philip at the Laptop Trader Channel on YouTube. Welcome back to our community. Again, I'm here to share my experience and give back one video at a time. This video series covers many aspects of stock trading, trade management, and how to create confidence by putting the odds in your favor. So good luck. Any questions or comments, you can leave a comment on the video, or you can contact me at laptoptraderphil@gmail.com, or if you know me, you're welcome to reach out. Caution, most stock traders lose money. Please protect yourself at all times. Nothing discussed in this video is trading or investing advice. This channel is for informational purposes only. Please seek qualified help if you need help investing. Invest in yourself. Start now by educating yourself on how markets work and finding out what is right for you. Invest in yourself and then invest in the markets. Okay guys, so our May into June laptop trader agenda. Welcome back. Hopefully you all are enjoying the nicer weather. Summer's almost here. And thank you to all the families who lost loved ones in any war or conflict. I thank you very much. If you don't like America, this channel may not be for you. Anyway, this month we're going to focus on trade management and assume you know how to enter and exit a trade. If you don't, watch my other videos. So we're going to cover why it is important to track and study your trades, why it is normal and okay to have losing trades and or a losing streak, how to take time off and not worry about your business and why it is a good thing for you, what is the effect of position size and risk size to your business and your thought process and your emotional stability, how to take profits and keep a trade open with little to no risk. Finally, sizing your trades per your account size and to your skill level and your experience. So, having said that, let's get to some live charts. Let's just quickly look over the markets. Okay, so here's the S&P 500. We closed the day, Friday in the week at 589.39. S&P has had a nice move up off the bottom. All-time high in S&P is 613.23. One interesting thing about market tops and market bottoms is oftentimes you'll see these wider range candles or wider range bars at a bottom with volume. That's exactly what we've seen here. We're currently in the small trading range between just under 600 and about 575. So you can see this little kind of box right here. And let's look at the NASDAQ ETF, QQQs. Very similar picture with the NASDAQ hitting bottom back here on April 7th. Since then, it's been in this uptrend. Recently, we've been in more of a trading range. So that's overall neutral at this time. The Russell 2000 is a little bit weaker than the two main indexes because this is smaller cap stocks, but the pattern itself is very similar. We're in this trading range after we hit a bottom in April. Nowhere near the highs, back here at 244.98. Closed the week at 205.07. So you can see that relative weakness in small caps. Dow Industrials, we reached a high back here in December at 451.55. Closed the week at 422.85. Again, same picture, big wide range bars at the bottom on volume. Since then it's moved up, right? So we made a higher low. We just made a higher low here. So this is, again, the small trading range. So the market's just kind of settled down right now overall. Nothing too exciting in the last couple weeks. Transport index is very, again, similar picture to the other major averages we watch. So now, let's get to the focus of this month. So again, we're going to focus on trade management, tracking your trades, how to take a losing trade, how to take time off. We'll discuss position sizes and stuff like that. Okay, so anyway, I took a vacation in May, and during May, I completely turned off the computer, didn't care about the market, didn't care what happened. All I did was went on my platform. I have about 20 open trades. I had 22 going into vacation. Now I have 20, so a couple stopped out. No big deal. But yeah, so I just set my stops, went on vacation, came back, and I reduced my positions. That's all I did. I reduced my positions, set my stops, went on vacation. So let's go to overall. I want to go back to January. Okay, so since December, the market was in a sell-off mode until April. In December, I shared with you guys, December from last year, I shared with you guys I made a small profit trading. Then in January, we had a down month. Okay, I had 15 trades with 7 wins and 8 losses, 47% win rate. January, we lost $120.71, minus 8.29 R. So December was a crazy month for the markets. Then January was more selling, and so my trading plan reflects that. So it's important to track your trades, right? How are you going to know this stuff unless you track your trades? That's lesson number 1. Keep track of what you're doing. Keep track of how much risk you're taking. So when we look at risk, I look at 2 risks. I look at my stop loss risk, which is my entry. Okay, my entry price minus my stop price gives me my per share risk, right? Risk per share. And then if I take that risk times how many shares I own, I can come up with a risk number. In this case, it's $8. No big deal, right? I took $1.60 per share risk, $8 total risk, and then the total risk for the trade is simply my entry price times the number of shares. So I've got risk per share, stop loss risk total, and total risk. Okay? My normal position size, you can look at total risk as position size also. Okay? My normal position size in a normal market for my plan is $1,000. Because of the crazy market, I cut that way down. You can see that 205 risk, 148 risk, 219 risk, right? So I'm a quarter position size or less in most trades, and this is the only one I believe which was over a half lot, which was Instacart, and even that stopped out. So you can control your risk by controlling your position size. That's another lesson that you'll learn from tracking your trades. Okay, so watch how much risk you're taking. If you're a new trader, regardless of count size, I would say keep your risk below 10 bucks. Because until you have a track record, it's going to be very tough for you to come up with a trading plan. Okay, so if you keep track of your trades, keep track of your risk, then when you start succeeding, you can start raising your risk. Now, what do I recommend on total risk or position size? Well, that's a tough question to answer because you have to decide for yourself what can you sleep with, right? I can sleep just fine with $1,000 position size. But in turbulent markets like we had back in January, December, February, March, I cut that down. I was no longer comfortable, so I cut that down. And even when I tried to up it, that didn't work either. That was my largest loss in January, minus $60. Okay? So for me, I color code my tracking. So these pink or red trades are trades that I stopped out. And the blue trades are trades that I had a profit or a win. So win-loss, color-coded. So when I go down this risk profile, this is risk per share. You can see the risk per shares that I'm taking is kind of all over the place, right? We've got DoorDash. I took over $9 per share risk. Well, why would I do that? Because DoorDash is a more expensive stock, as you can see right there. At $185.22 a share, you're not going to be able to take this trade, with a 50-cent stop loss, it's probably not going to work because the range of DoorDash is just too much. We could look at that on the chart. Let's see if I find DoorDash for you. Okay, here's DoorDash. So you could see, an average day. Let me zoom in on this for you guys. So just eyeballing it, you can see on an average day, DoorDash probably has a range of, probably $6 to $8 a day. So you're not going to be able to trade a more expensive stock like DoorDash with, a 50-cent or dollar stop loss. You have to give your trades room to work. And on a big day like this day, you've got a range of almost $15, right? You can see that. So up here, if you look to the left, right in this area, you can see the range. 190.09 is the high, low is 175.50. So you've got almost a $15 range on a large day. On a small day, you've got a range of, almost $5. So you have to use some common sense when you're setting your stops, when you're taking a trade, and how much risk you're taking. So even though this is a 185 per share stock, I only bought one share, right? I took a risk of $9.12. I had total risk in the trade of one share, right? And I had a $9.12 risk. And sure enough, I stopped out, lost $9.12. That's just how it goes. So when you're looking at prices of stocks and how much risk you're taking, you have to take this stuff into account. And this will give you confidence to take, trades of stocks that are either more expensive or, you can also play, in these low price stocks. Here's a company called Perfect Corp. And I had an entry of $2.97, stop $2.75. I had a target of $3.50. I bought 50 shares. I had 22 cents of risk per share. I took a total stop loss risk of $11, and I had a position risk of $148.50. Okay, I exited at $2.25 because there was a gap down. So remember, stocks can gap down and stop you out below your stop. So there we stopped at $2.25 and my stop was $2.75. So that's going to increase your loss beyond what you had planned for. So in this case, in the case of a loss, I planned on losing $11. I ended up losing $36 on a cheap, $3 stock. So that's minus 3R, okay? So, you can trade any price stock you want when you go about it in this manner. Here's NuScale Power, right? In this case, I had, risk per share of $3.30. And I doubled my risk by doubling my shares. So here I had 5 shares, then I had 10 shares, and I ended up losing $8 on the trade. So when we kind of put this all in context, you can trade with a lower, if you don't have a bunch of money. But even if you have a bunch of money, it's wise if you're going into a new business venture to take small risks, build your confidence, build up your experience. Take 100 trades and see how you do, right? And then track it, and then monitor what you're doing, and then how much risk are you taking? How much per share stop risk do you take? On this, I didn't do an average, but you look down here, I got $8, $11. I'd probably say my average risk for January is probably under 20 bucks. Okay. And then when you do all this, you can just simply go over here, and on a spreadsheet, if you highlight that column, it'll give you a sum. Okay. And it'll give you these values. And then what we come up with at the end of the month, I don't know why that doubled. That's weird. I don't think that's right because I did that before as 120. Anyway, so these spreadsheets mess me up all the time. But then you can take some notes, right? So now you can take notes on your trading. Notes on January, right? And I just type out what I thought. Not a great month trading with market weakness and poor trade management, right? By eliminating the larger losses, it could have been much better. Instead of losing 1.2% of my account value, it could have been less than 0.5% for the month, which is another important metric you want to track. How much are you down for the month? If you get down to a certain point or a week or whatever you're doing, you should have a limit on how much you're willing to lose in a week or a month. So if you're having a tough time, you may just want to stop trading and reevaluate. The positive for the month is that I identified market weakness in mid-December and reduced my position sizes to less than half. So I saw the market turning, and therefore I took action to less than half of my normal position size, therefore cutting risk up front, and I was still able to continue trading. Again, I had a 47% win rate, losing month minus 8.29 R. Okay, so then let's fast forward to May. So what happened in May? So in May, we can see that I've got all these open trades. I've got, I think, like I said, 20 open trades at this time. And now we can start to take a look at our risk that we're taking. So in my plan, my normal stop risk is maximum 50, and my normal plan total risk is $1,000 position size. Okay, so I'm not a big shot, on YouTube, but someday I might be. Again, then you can just calculate your risk per share times how many shares you own. That will give you your stop risk, and then you can total up the position that you're in. So in this case, I have one position slightly over the risk, max of $1,000. So I'm at 1082. I'm okay with that. You have to have some flexibility in your plan for the way you trade. I also have a max of 50 for my stop loss, right? So here's 51, 54, so those are slightly over. This one is way over, 189, but my position size is still a half lot. So I'm okay with that because it is in a bottoming pattern. Then we go down. This was a stop trade that stopped out, so that would be a loss. Then we had a win, and then we had another one that closed for a profit, because this is something you can do with your trading too. So here's Chewy. I owned 20 shares. I decided to take profits on half of that and let the other half ride. So in this case, I own 10 shares, and because of my entry and because of my stop, and then I raised my stop, I have zero risk. Right? So this is how you can take zero risk. I took profits on half, raised my stop, and now I essentially have what's called a free ride, or free trade, or a free roll trade. I sold half, took profits. I'm going to let the other half ride. My stop is at 41.25, which is above my entry price at 37.78. So I've got a free trade. We're just going to see what happens. Let it ride. So that's a really cool thing you can do with trading. And if we go down, I did that twice. I did that. Now here's another case where you can add to your trades with very little risk. So here I had company Rigetti Computing, symbol RGTI, because right now AI and quantum computing is still a theme. I added shares. I now have 30 shares at an average cost of $9.16 per share. I've got a stop of 10.75, right? So that's above my entry. Again, I have target of 15. Again, risk per share I have 0. Stop risk is 0, but I have an overall position of about a quarter position, 274.80. So that's essentially a free trade, right? Unless it gapped down and stopped me out. I have one trade here that's over my stop risk, and I have no trades essentially that are over my total position, other than this one, $82 over total. Otherwise, I still have like half lots and quarter lots open on the trades. So again, then you just summarize what you see. So I summarize quickly. We still have a lot of open trades, right? To over 20. But closed trades for May, so far I had a profit of 101.20 and plus over 7R. So far May looks good. Anything that was white is still open. So then we just go into June. So when I go to June, any new trades that I take, I will enter on the June tab. And any trades that stop out or close going forward, I'll just close them out for the May spreadsheet. So this way I can track what's going on month by month. And then I keep a summary of how many trades I've got. Now this is not working right now. I have to fix the spreadsheet, but usually I would have a pie chart. So let's see if I can show you that for the year. So I'll just go and hopefully it loads up. Maybe it won't. Anyway, computers can be frustrating. Let's be honest about that. Yeah, it's not going to load. Anyway, so you need to take notes. You need to track what you're doing so you can get better at entering, exiting, and managing your trades. Okay, finally kicked in. Anyway, I've got a pie chart that shows overall where we're at. This is my annual spreadsheet. So I take all this information, I enter every trade in the annual sheet, and then when this is working, I'll have a copy of my total win-loss ratio, winning trades versus losing trades, average win versus average loss, and then I can gauge how I did for the year. So you're going to want to have some monthly limits on your trading, how much you're willing to lose. You want to have some risk limits, right? How much you're willing to risk per trade as far as shares times your risk per share. You want to have, as far as your metrics go, you want to know your average win and average loss, because if you have larger average losses versus your average wins, you're going to be a losing trader. It's just as simple as that. So these are some of the metrics that I use to track my trading. Okay. Now you don't have to use a spreadsheet. You can always just use, you can do this on paper. You can use other ways to track your progress. Just come up with something that works for you. I am definitely not Mr. Spreadsheet or Mr. Computer, as you can see. There's some people that are really good with spreadsheets and creating stuff with graphs. It's not me. I still to this day keep track of my trades in a journal, on paper, that I can take notes on easily. I find navigating computers, as far as the thought process goes, to be kind of cumbersome. And there's just not enough room on these spreadsheets to put down a thought. So, but I do track also why I entered a trade here in the result. So why did I enter? So here I added in an uptrend. This was a strong stock with relative strength. This had a certain pattern, a bottoming pattern with a low price to sales ratio. So that's why I entered that one. Here was a gap up on earnings to a new level. So this one, why did I stop out? Why did I enter there? Here is hold half of a position because I noticed this was a low volume stock which had terrible bid-ask spreads, but the company has really good metrics. What else did I look at? Here's another one. Low risk trade after a gap up on earnings. Let's take a look at that one. Okay. Let's just look at a chart. So Curiosity Stream entered on May 9th. Let's look at that chart. So you want to combine your charts with your activities and your progress on your spreadsheet. And this will help you way more than watching any YouTube video. In fact, you need to in all honesty, get away from the videos and get into your trading is what you really want to do. So here we entered on May 9th. Why did we enter on May 9th? Well, you could see the stock was in a very slight uptrend, pretty much a sideways consolidation for months, okay? And it only traded on average, probably, maybe a couple 100,000 volume. And then you had this real tight area here, and then earnings came out. The day of or the day before earnings, we had 3 times the volume, almost at 423,000 volume. Look down here, see the volume over here? And you can see immediately the day after earnings, we had a gap up, it closed higher on over 10 million shares traded that day. Now that's like an extreme increase in volume, okay? Extreme. That's like, probably almost 10 to 20 times volume in one day. What does that mean? Okay, that means that there's institutional interest in this company for whatever reason. We don't know. All we know is earnings came out. They earned 1 cent per share on 5/6. I entered the next day after this gap up on volume, which is a great indication, and relative strength, I believe, to the market on that day. And then we had, I'm sorry, I did not enter that day. I take that back. This was the catalyst for me to enter over here. So we had consolidation, 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 gap up on earnings on volume showing institutional interest. So let's get on board with the large money, right? The smart money. And then we had this, essentially this green, red, green. So we had this 3-bar sandwich after a gap up. I entered on this day and have been in the stock ever since, okay? And you can see what's happened. It made a new high on Thursday. So this is a stock with some relative strength in an uptrend. I got a good entry here. And now we're just managing our trades. So let's go back to the spreadsheet. So we have a picture now of what's happening. And we have a picture here of, what is my position size? Well, I had 10 shares, and then I added to that position. Now I have 50 shares, okay, at an average cost of $3.70 per share. And a stop, okay, back here I raised my stop. I added and raised my stop to 420, so that is higher than my entry. Therefore, I still have the same target of $10, but I have 0 risk per share, unless there's a major gap down under my entry price. I have 0 stop risk, and I only have a position of $185. So I have no fear on this trade whatsoever. I don't care if it stops out tomorrow or next month. And I'm thinking, because it's an uptrend, it's going to hit this $10 mark at some point, showing a nice profit. Currently, obviously, I have an open profit on this trade. Again, in my notes here, I have a low risk trade after a gap up on earnings. So I'm very satisfied with that trade. Again, when we go back to our agenda, okay, let's talk about our agenda. We could see that, so, this is how I focus on trade management. Why is it important to track and study your trades? So that you can have confidence in your trading plan, so that you can even develop a trading plan. Again, if you're new, you probably need to get 100 trades under your belt and track them all before you can kind of figure out where you fit into the market, which is why any trader worth their experience, I think, is recommending to new traders take very small risks, right? Take $10 risks on your trades. Don't get it extended. Why is it normal and okay to have losing trades and or a losing streak? Well, market conditions happen. There's nothing I can do about a bad market between December and April. And so I traded through that, and I had, quite a few losing trades. I had a losing streak, because of the market. So what did I do to correct that? I reduced position size. I allowed my trades to stop out at a low loss instead of taking large losses, right? That's how you handle when things aren't going right. You take losses and you take small losses. You don't let stuff get out of control so that you can live to fight another day. And just so you know, overall, between December and May, my account actually grew slightly, okay, even through that bad market, because I kept stuff in control. Again, how to take time off and not worry about your business. Well, it's good for you because, right, it allows you peace. It allows you peace of mind. It allows you to not worry about things. When you have a trading plan, you have a plan of action. You're following that plan, and you know worst case. You know what your worst case scenario is. Okay, so you don't have to worry about it when you can, upfront manage your worst case scenario. And I think I showed you that in spreadsheets what my worst case scenario would be. What is the effective position size? Well, the effect is if you're taking too large of a position per your account, then that can be detrimental to your account overall. If you are overextending yourself, personally, I like to keep my position size at 10% or less, and then further reduce my risk to something even more manageable, right? So let's take a look at my largest position on that right now, which would be here, right? So I have 1082 overall. That is my worst case scenario, is I lose 10% of my account if Cardinal Health tomorrow goes out of business. And companies do go out of business, guys. You can just look at last year at Silicon Valley Bank. That was, I think it was like $150 stock, in business one day and out the next. Okay, and people lost a lot of money on that company. So that's why I think this number is important. Know your position size overall and keep it to something that you can live with and sleep with. Again, my stop risk on this is only $15, guys, on a $155 per share stop. So you don't have to take outsized risks in order to participate in the market. So that's the effective position size. It allows you to sleep at night, okay? And it keeps you emotionally stable so that you're not making emotional decisions in a market that will take advantage of that. How to take profits and keep a trade open. I shared that with you. I have several open trades right now with little to no risk because the price has moved up, I've moved my stop off, I've moved my stop up, and or I've taken profits along the way. So I think I was very clear about that. If I wasn't, let's go over that once more. Let's take a look at that one. That was 0 risk per share. Okay, let's go on. And you can see many of these are very low risk per share. Here it is. NUTX stands for Nutex Health, right? I have 2 shares, entry, stop, target, and you can see I used to own 4 shares. I sold half of my shares and took profits at 163.25, right? So I held 4, which was a position. I had a target of 160. I sold half at 163.25. I now own half of that position going forward with essentially a break-even stop, giving me 0 risk per share, okay? Even though overall I have a quarter position, okay? So that's how you can have some peace in your trading by taking profits. Sizing your trades per your account size and to your skill level and experience. Again, I've talked about that. I'll say it one more time. My recommendation is no more than 10% of your total trading capital. And then size down if you're new, maybe like $10 per trade, using a stop loss, maybe $20 per trade if you think you can handle that. And to your skill level and your experience. Again, you're going to need to develop this skill, even if you don't think it's a skill. Trust me, it is. Build your skill level up. Track your trades. Take 100 trades and judge yourself and get some experience. Because if you're new, and let's say you're a big shot and you've got, I don't know, $1 million account, and you think you're going to risk half of that on one company with no stop and you're just going to wing it, I hate to tell you, you may have $1 million now, but you're not going to have $1 million for long, because there's some pretty big players in the market that are watching that, and they're looking to take your money. And if you think you're a big shot, I just want to share with you real quick some math. So on this small company, CuriosityStream, in one day, 10.838 million shares were traded at probably an average price of somewhere around $5. Okay? Just to share with you just how much money is in the markets, right? We could take $5 times whatever that number was. I can't see it. Times 10.838 million. Okay? Just think about how much money is in the market. 10.838 million shares on that one day. On that one stock, $54 million were traded. Okay, so if you think you've made a lot of money in a different field, you know, you've got a big trading account, you're a millionaire, and you think you're going to come to the market and just, that your skills are going to transfer to the market, I'm trying to tell you they're not. This is a new skill if you've never traded before. And there's a lot of money in the market. There's some sophisticated traders that are looking to take your money. If you've never traded before, you need to put together a track record, track your trades, however you want to do it, spreadsheet, paper, I don't care. But if you're new, don't take too much risk. I hope that helps you guys out. I've given you a few parameters that I think would keep you out of trouble. And I've showed you my stops. I've been pretty open and transparent with that. And then next month, we'll just track, you know, if any of these trades stop out, let's say Hydrofarm goes to target or stops out, then I would just simply update my spreadsheet right here with an exit date. What was the P&L? Was it a plus or minus? You know, was it a plus or minus on my R? And then I'd take any notes and I'd enter that information in my spreadsheet to track my trading. So that's it for this month. I hope that agenda was helpful. I think it's a little bit next level topic, but it should be first level, because if you're not tracking your trades, you're not running your business, and your business is running you. Again, if you have any questions, my email is laptoptraderphil@gmail.com. And please watch, like, subscribe, and share this channel, as it's valid, relevant information. And I will see you guys next month in July. If weather's getting warmer, have a great summer. Goodbye. We'll see you then.